Hey everybody, it's your boy Wayne here to get you an update on the 3 stocks that I'm currently running the wheel strategy on. Last week, I mentioned that I bought 100 shares of SoFi. I kind of want to point out the cool thing about where I have gone in running this strategy is those 100 shares I was able to pick up from the premium earned primarily from Celsius. So as far as I'm concerned, yes, I paid $574 for my 100 shares of SoFi. But as far as I'm concerned, my cost basis is zero. So I am going to go ahead and see how much premium that I can earn. I can tell you right now, SoFi being a relatively cheaper stock is not going to, generate significant premium. But as you can see here, the very first transaction after buying my 100 shares, I was able to sell a covered call for $13. Now I did buy to close early on that, and essentially I netted $11. I closed that out on the 28th, holding that contract for 5 days. So I earned a total of $11. The next day, I turned right around. I wrote another covered call. Again, strike price being $6, which is above my cost basis, and I earned a premium of $11. I want to go ahead and take you here to SoFi, and even just in the last week, if I did nothing but just sell the stock, I will have already earned 6% return on my initial investment of $574 times 100 shares. I also want to point out, if we look at the options chain, SoFi is not one that has a lot of premium. So if we go out here to the following week, you can see here I sold a $6 strike price before obviously the share price was up to 608. But if we look at the options chain, there's not a whole lot of premium. We see a strike price of 650 would get me about $5. $7 would get me $2, and then anything above 750, there's just nothing in the form of premium. So, yes, SoFi is a $6 stock. Yes, there is significant volume, but it doesn't necessarily equate to significant premium. So I have my expectations somewhat limited, but I am excited to make $20. You figure even if these shares are called away, I will have made $22, and I will certainly make the appreciation if those shares are called away at $6. Let's go ahead and get into Amazon. Boy, Amazon is not turning out the way that I thought it would from day one, but that's okay. And as you guys know, the latest endeavor was me buying to close early on line item 5 here. Quite honestly, I was just impatient. I didn't like not having anything to do with this Amazon position. So I bought to close early, and then I sold a series of cash secured puts, hoping to kind of get me back in the game of earning some net positive premium. So on the 23rd of March, I did sell a cash secured put, $98 strike price, expired on the 24th. That was 1 day, and I earned $60. It did expire worthless. The following week, I wrote another cash secured put, got a pretty solid strike price of $96, which means when things first began, I had to have collateral of $10,400. We're now down below $10K to $9,600. And for that, I earned a premium of $101. I did buy to close early, so I netted $96. Now, currently, the share price of Amazon is up. So right now, for me to sell a cash secured put, I'm not going to earn much in the form of premium. So I'm going to go ahead and wait till Monday, see if Amazon goes red, and then hopefully I'll be able to write another cash secured put. I'm going to hang in there with Amazon at the very least until I get in the positive, because right now on the entire Amazon wheel, I am negative $107. But that's completely not the case when it comes to Celsius. Celsius has done very well by me from the very beginning. As you remember, in late January, I was assigned a $93 contract. Currently, let's take a look here at Celsius. It is trading for $92.90, though in the last month, it has seen about a 3% increase. So I am relatively, confident that Celsius is going to continue to trade in the 90s, hopefully the low 100s. The last transaction, which is line item 13, I sold a covered call a $93 strike price. Take a look here. The previous week when I sold a $93 strike price, I was only able to get $65 on that open premium. With the stock going up, I was able to generate a little bit more, so $130. I did buy to close this early, and so this contract was held open for 8 days. Again, I am relatively confident that I'm going to be able to make some decent money. Let's go ahead and take a look here at the options. I have not yet written a contract, but when the markets open on Monday, you guys know I like to choose at least 1 week out, so April 6th. Is 4 days out, and if I choose this $93 strike price right here, again, I'm selling a call, I'm choosing a $93 strike price, which is above the current share price. This is going to be at my cost basis, so I wouldn't gross anything on the overall share price appreciation, but I would get $205. Or I could choose a $94 strike price, which would gain me $100 on the overall share price appreciation, and then I would also receive about $150 in premium. So once again, things are going pretty good. If we factor in Amazon, Celsius, and SoFi, I have made $1,400 on the dot. So not too bad. Clearly Celsius is the big winner. I'm not done with Amazon. Got to remember all of that money, right? All of that collateral. Since I do not have any open contracts on Amazon, yes, I am down $107, but my $9,600 is sitting safely in my brokerage, earning interest, and I am going to jump back in. I even if I do decide to exit Amazon in not running the wheel strategy, I will not do so until at least I receive some net positive premium. And to give you guys some ideas of what else I'm working on, I want to give a quick shout out to a content creator. His name is Jerry. He has a series called Retire with Less. I have been learning so much from his videos, and he puts out very consistent content, sometimes 3 to 5 videos per week. And I'm learning a lot from him. And it's funny because I'm giving him a shout out. He's got thousands of followers, and I have 400 of you amazing people. But if you haven't seen his channel, he's turned me on to a few stocks that I otherwise had not heard of, and that includes TQQQ, TNA, SOXL, and a few others. And so I can tell you right now, Amazon has an entry point of over $100. TQQQ currently has a way lower entry point, and you can see here, this is outside of the wheel strategy, but just in the past month, I have written a series of cash secured puts, and you can see here from March 3rd to March 27th, I have written 8 contracts, and I've earned $246. That's less than a month. And again, the strike price, much different than Amazon. You can see here, this strike price was for $1,900. This one was for $2,150. This was for $2,400. So TQQQ, I think it would be worth it for you to do your own research, check it out. And of course, I like the entry point. A stock that's $22 a share versus $100 a share. I know that's something that will interest you as well. Hey, thanks so much for tuning in for this video. Be on the lookout for some upcoming videos to include a portfolio update for this past week. March is a wrap, so you're going to want to see all of the dividend income that I earned this past month. And hopefully you guys are enjoying the content. If you are, be sure to subscribe, give it a thumbs up. Have a safe weekend.